the single biggest intelligence test of our generation is, are they going to keep printing money? And if yes, buy. Right? Like that kind of seems where we're ending up, that people almost don't even really pay attention over time.
What happened with Elon Musk yesterday is very symbolic of that whole thing, which is regardless of what happens, there will be more printing this year in some form, some shape or fashion. Either the deficit stays at this level or they figure out some way again to help the people they're trying to help. And I think Trump has made it crystal clear. So if rates go higher...
What's going on, guys? Today we've got an excellent episode with Jordi Visser. He's got 30 years on Wall Street, and he's here to explain to us what's going on with Elon Musk and Donald Trump feuding on the internet. How's it going to impact your investment portfolio? We, of course, talk about things like Bitcoin, stablecoins, the Circle IPO, and why so much capital is flowing into all corners of the investment portfolios that both institutions and retail have. And, of course, we're going to talk about all the things geopolitics, economic policy, and why money printing and the national debt are the two things you got to continue to pay attention to. Here's my latest conversation with Jordi Visser. All right, Jordi, I thought a great place to start the conversation is we have Elon Musk, Donald Trump, the world's richest man versus the world's most powerful man. I mean, this is entertaining as hell, but also probably not good for the country. What's your take on these two guys going at it in public?
All right, well, first of all, it's all on social media. Everyone can enjoy it, so it was fun. I'm actually taking a different take on this. So to get to this point, and you have to remember all of the videos of him at the inauguration, the childlike looks he was giving, how happy he was, the double thumbs up. And I mean, Elon Musk starting Doge, talking about trillions of dollars that he was going to find. And in a span of 4 months, the world's richest man and arguably the smartest, who's created more billion-dollar businesses than anyone alive, he's broken by the debt and deficit. Like literally, it came down to the fact that he's complaining that they couldn't do anything in this bill. So the fight at the end, Elon Musk got to the point where he's literally attacking. They're saying, throw them all out, get rid of them. If that isn't a statement that we tried everything we could with austerity, we tried everything we could to get out of this. The fight yesterday was just the culmination point of you can't stop the fiscal problems that we have, no matter how you try. And it was only a week ago that he said, I guess I got to go off and try to be, productivity is going to get us out of this. But he couldn't resist the fact that they were going to put this bill in and it wasn't going to do anything to fix it. I think people should just lean back and just realize if they had any doubts coming into this year about how we were going to handle the economy, that was the fireworks show to say there's no way, because if there was anything possible that could have happened, the smartest man would have found it.
It felt like it was the and I, before I say this, I love Elon Musk. I obviously think that he's an incredible entrepreneur. Things that he's done, not only in terms of actual productivity and building products and services, but I think that he has really inspired a generation of people to think bigger and try to build things, etc. But it was kind of the temper tantrum at the end, right? Mm-hmm. It's like, we got the kid, they get frustrated. They don't know what else to do. So they just, scream. And that kind of felt like there was the explosion of that. But what I do think is fascinating is I interviewed yesterday Russ Vaught, who is the director of the Office of Management and Budget. Mm-hmm. And Russ, when I asked him about the blowing out of the deficit and the increasing of the debt, et cetera, he said to me, well, it depends on how you're analyzing it, which, okay, tell me more. And what he explained to me was the CBO is using this like baseline kind of projection, and then they see each bill, does it increase or decrease it? Mm-hmm. I'm not an expert on the national debt or on these bills, but what I did find interesting was he claims that the bill that they're putting forward will reduce the deficit by $1.4 trillion over 10 years. Again, I don't know if that's true or if it's not, but what I started to unpack from that conversation was a bunch of the forward projections of the impact of these bills really comes down to like, are we using your algorithm or mine? Are we using your spreadsheet or my spreadsheet? Like whose model, whose baseline, whose assumptions, right? And so it actually makes me wonder how much of the entire debate is just like, don't even engage in it. And it's more so, I think what Elon is saying now, like you just can only control one side of this equation, which is productivity. All of us should stop trying to get the government to do anything. And let's all just go try to build companies, and increase GDP.
Yeah, I find So I don't think we've ever done this here, and I may have mentioned it once, but I want to simplify the U.S. economy, and it'll bring it into kind of the way it eventually brought me to Bitcoin, but especially this artificial intelligence side right now. Think of the economy as now being three pieces. It's the industrial economy, which is filled with debt and is growing very, very slowly. We've been weaning off manufacturing jobs. We've exported or we've imported everything. We don't make anything. And that part has a lot of the people that support Trump in it. You've got the digital economy, not as many workers, no debt. That one's growing rapidly. And then you have this other economy that was created to balance out the decline in the industrial economy, which is the government economy. The government economy is massive. Anyone who wants to sit here and nitpick about whether this is possibly going to, debt to GDP in this country has been going higher consistently since the computer came in and the digital economy started to go. The reason Bitcoin is so important in this conversation and bridges the two is because that government economy cannot shrink. And the reason it cannot shrink, healthcare expenditures are growing right now at 8 to 10% a year because of Medicare and Medicaid, because of the health of the country. There's no way to reverse it. And almost 2 million people over the last year have started collecting Social Security benefits. Some of that is demographics. Some of that is just the fear now over the economy. Regardless of any way you want to go through it, what we found out is we tried to do something to balance the deficit. The debt to GDP is not going away. So the only parts about this that people should think about, are we going to grow? Yes, I believe this is a growth package. Will it be able to grow more than interest rates? Well, that depends on what happens to long-term rates. I just think at this point, we're going to have a normalization of rates. The pressure is going to be on long-term rates to move higher, not lower. And even if they stay right around the same area, which is pretty much a good thing for equities, it's not a good thing for fixing the deficit in the budgets. They can play around with all the numbers. The reality is this has been going on for a long time, and the government cannot be shrunk because the voters don't want the government to shrink. And that's what we found out with this bill.
So Q1, we had negative GDP. Q2, we're in boom times. The Atlanta Fed's GDP now is like up over 4%. It feels like all the people who are predicting the recessions, depressions, and Black Fridays, they don't want to talk about the fact that if you don't get 2 straight quarters of negative GDP growth, you can't have a recession. I think you previously had said a number of times you can't have a recession if people aren't losing their jobs. Mm-hmm. How are you looking at this economic data right now? Because it sure looks like this was a V-shaped recovery. Reflexivity is real, and the economic growth is coming roaring right back.
Yeah, first quarter was obviously distorted because of the import numbers, which went violently ahead of the tariffs. So by having a ton of imports, no exports, the trade data subtracted a significant amount from GDP. So if you just use domestic final sales, the growth was close to 3%. The second quarter, I'm going to guess, is actually going to be less than that. So I wouldn't take in what's happened. The main point is we're not in a recession. As I said, and this is an important part, healthcare is about 18% of nominal GDP. And that's growing, as I said, at 8 to 10%. So if you just take that part, forget the AI part that we took, there's just no way to have recessions, and there's no way for the economy to fall off the map unless we do agree, we fire tons of people from the government and we have tariffs go up to whatever. None of that's happening. So the economy is fine. And that's the other pressure point for rates. It's the reason why it's going to be difficult for the Fed to cut. I will say all of the data on the jobs situation is starting to become a little bit more problematic. And I think in the second half of the year, the realization is going to set in that AI is not destroying jobs, but it's hurting the ability for companies to hire. And I don't think we're going to be able to have like a significant growth period. Housing market is very, very soft. It's not collapsing. So anyone who sits there and starts seeing charts of there's so many sellers in this, it's just soft. Commercial real estate, soft. We've talked about long duration assets. I think the economy is kind of in this state where the second half of the year, people should expect 2% GDP in terms of real growth. Maybe if inflation stays lower, we can get closer to 3. But from an equity versus bond perspective, bonds are not the investment. It is stocks. And I think we're getting closer. One important thing on the stock market for people this week. So far, this rally has really been driven, again, by tech. as we've come out of this. So you and I have talked, and I believe that semiconductors and some of the names that I've mentioned here, like Micron broke out this week, we're starting to see the realization, I'm hearing it more and more, like, hey, this build out of both nuclear and the data centers, this compute thing is real. So they're finally getting back on board that. And semiconductors are unchanged from a year ago. So I think there are some investment themes that'll get people excited. But the thing that they should all watch is we need to see some kind of inclusion from small cap, particularly with this audience that cares a lot about the utility side of crypto. You need to have small caps start to come up a little bit here. And I'll talk about that later.
Yeah, well, explain why that's so important.
So at this point, it's been a very concentrated market. And as I've gotten more, let's say, in the community from the crypto side, I've started to realize the importance of, and I'll just give three that I monitor every single day: Ethereum, Solana, and Sui. And I'm just watching. And the reason this is important is there's two sides of the crypto market. The one is the institutional movement towards Bitcoin, which is happening. You and I both hear it. We see it. It's there. There's a bid underneath. It acts like a raging thing that'll eventually break out to the upside. And I still believe that we're going to have a short squeeze this year. What has contained it, though, is we don't have the enthusiasm and the trading and the oomph that's necessary for the innovation side. It's clearly happening on the stablecoin side. People see it. I mean, you saw the way Circle traded. You saw the excitement. You've seen what's happened on every deal that's come to the market. Crypto has an energy there, but it doesn't have the speculation right now. It doesn't have the meme coin side. It doesn't have any of them. If you do charts of any of those names I mentioned relative to Bitcoin, it's straight low. It looks like QQQ to IWM, or for people not following with those ETFs, innovation versus small cap stocks. At some point, beta needs to do well. And I think that's what we're getting close to. I've kind of said once Ethereum gets above 2650 to 2700 and you actually get a break above there, I think that is going to be the point where you start to see more speculation and belief that the innovation side of crypto is there on top of the institutional adoption side.
When you start looking at Bitcoin in particular, it feels like Bitcoin trading down while Elon and Trump were arguing. I had a lot of people calling me. I think you had people reaching out to you saying, hey, is Bitcoin going down because these guys are arguing, or does it just happen to be a coincidence? How do you evaluate kind of a decentralized liquid asset that trades 24/7 when the two most powerful rich people in the world are over here debating? Today's episode is sponsored by Figure Markets, the place you go to earn yield and borrow against your Bitcoin and Ethereum. Figure Markets crypto-backed loans let you borrow against your Bitcoin or Ethereum with up to a 75% loan-to-value ratio. That's one of the highest in the industry. Whether you're looking to reinvest and double back down into more Bitcoin, cover everyday life expenses, or just have cash on the hand, these loans make it simple. Interest rates start as low as 12.5% with no credit checks, no long applications, and no prepayment penalties. Are you worried about using your Bitcoin as collateral to someone you don't know? Figure Markets is a subsidiary of Figure, the largest non-bank HELOC lender in the United States, with over $14 billion of home equity unlocked, and founded by Mike Cagney, who founded SoFi. Sign up today at figure.com/pomp and download their app to explore all their offers. Explore crypto, loans, earning opportunities, and more with Figure. Go to figure.com/pomp.
The great thing about watching retail traders, they're all momentum based and they're just going with what's working. If you do an overlay of a chart this year and actually into the election, let's think about it. Elon Musk was connected to Trump. Bitcoin was connected to Trump. The overlay of those two, Bitcoin and Tesla, has been it's almost one for one. There was like a brief period where they broke away for a little bit, but it's pretty much the same thing. There shouldn't be that way. And so I understood why people to some degree were like, oh my God, it's not going. And it was because it was falling. But the reality is what Tesla and Musk represent to me was the only thing working in the market for the speculation side. Palantir's gone back up to highs. But again, it has been a very difficult time for traders. You and I saw each other in Miami back in January. We were wearing bananas around our neck. It was a little, the banana zone was what everyone was talking about. Well, the inauguration kind of destroyed that enthusiasm with the meme coin coming out. Then you had the Malay situation and everyone kind of lost it. And then everything broke down. I think we've been building up the trading side right now, and Tesla falling to me will break the correlation between Bitcoin and Tesla. And now I think, again, it's going to, for us to get to 200 in a short amount of time in Bitcoin, Ethereum, Solana, and Sui have to be part of that move. And I think we're getting closer to that move now.
And the participation of kind of the altcoin market, is that net new dollars coming into the market, you think, or is that kind of a redistribution of people saying, hey, Bitcoin's gone up a lot since maybe I bought during this last cycle, and now I'm just going to kind of push out further on the risk curve to try to capture more upside as we continue in the bull market?
I think, to use a phrase that I hear a lot, pencils are down with a lot of people right now. I don't know if you're getting approached. I've had more people ask me about BitTenzer in the last month. And these are from people that have never bought crypto. Mm-hmm. So the one thing I like is that family office, like everyone's now realizing, I have to have an allocation here. They're not doing it because it's at all-time highs. They're looking at these things because they believe in AI. And so BitTenzer, they literally send me something. They send me the deck. Hey, I'm getting presented this. What do you think? And I go, which part? Well, you're an AI guy and a crypto guy. This should be right up your alley. And I'm like, here's the deal. If I'm right about Bitcoin, all of these things are going to do well, because to get to those levels, there has to be energy and investment from you guys with inside the beta, because the beta forces the strong to go higher. The S&P 500 cannot go up right now without the NASDAQ. It needs the NASDAQ because the Mag 7 are part of it. I've said this before, and I know people don't embrace it this way. I view Bitcoin as the ultimate S&P 500 of the world in 15 to 20 years, that it will just keep sucking in all of this money. And the beauty of it is that it can't be out innovated. That's the beauty of it, is that it can't actually lose its status as an investment, where everything in the equity market always does. We brought up Tesla. I just want to make sure people realize this. The market cap of Tesla is $1 trillion. They have almost no debt. Ford and GM combined, you see more of those on the road than you do Teslas, their cars. If people don't know, it's $100 billion of equity. That's their market cap, $100 billion. They have $300 billion of debt. That is that industrial economy. What Bitcoin doesn't have is it doesn't have any of that stuff. It just has a store of value that makes it kind of like gold. But really, as more money goes into the ecosystem, and that's why hearing people call about BitTenzer, that means people that have never invested in crypto are like, I think I got to get involved in this, but I want to find stuff that can go up tenfold. And I always say the same thing. Your problem with investing in any of these innovations, if you invest in 10 of them and you get 2 of them right, you've done well. The exit strategy on these things is very, very difficult.
Well, and I think it's also, even if I look at my own portfolio, right? Like Bitcoin is the thing that I will never sell. It's kind of the timeless investing principle. Buy great assets, never sell them. Yep. Everything else that we've ever held in crypto, whether it's for short periods of time or medium periods of time, we always knew when we bought it, we're going to sell it. And I think that is a very, very different mentality. And then naturally, everyone is trying to sell before the next person, yep. Right? And so you just kind of short circuit those things. One of the things that is going very well right now is the Circle IPO happened this week. Mm-hmm. And Circle went out, I think at one point the stock was up 200-300% on the first day of trading. How do you read so much excitement and performance coming from something like the Circle IPO? Circle
represents something very important, so people hear it. I remember back in October when I started kind of going around to people that understand the crypto space extremely well. One macro person in particular, and I said, I think stablecoins is the most important investment theme for next year. And he was like, how do you make money off stablecoins? And I'm like, stablecoins are the bridge between the two worlds. It's going to bring confidence in people that this is the place that I have to invest in, and it'll lead to stuff in the altcoins. It'll lead to Bitcoin, everything. We need the ecosystem to grow with wealthy people. The only types of people that I've seen, I see and I'll leave you out of this at this point on one side. You've been in long enough. So the OGs that have been involved from a very early stage, and then the TradFi people that made the bet to get involved. But to get wealthy people that are wealthy from the fiat world at this stage and then have them come in, it's very challenging. It's very hard for them to say, I want to be involved. And if they get involved, they want to move into the ecosystem. What Circle has done in my opinion, it matches up with the stablecoin bill. Like, it forces people to understand, like, why is this so important? Why is JP Morgan? Why Goldman Sachs? Why are all these people now speaking publicly about what are stablecoins? I think people haven't understood it, and this will force more people to go. And once you get into stablecoins and you really dig deep, I think you can easily make the transition over into the other side. And we've talked about this, but I just want to make sure people get it. The volumes are going to explode over the next 5 years, not just because the guardrails are going up, not just because of the work of Bridge and Stripe and all these people that are out there going. It's going to go up because of AI agents. That connection and the amount of volumes that are going to happen, where the easiest way to pay is in that way. I listened to a podcast this week, and a guy who doesn't code went on to Replit. He had the Replit founder on, and he said, I created a software overnight and I connected it to Stripe, and I got a payment in already this morning. That's the kind of world we're living in. And the fact that stable coins are going to be the chosen transaction, the money system and the bridge between the two is there.
Yeah, it's fascinating to me that once you start to hook up a lot of these technologies, it's kind of like Bitcoin is an accelerator, stablecoins are an accelerator, AI is an accelerator, humanoid robots are an accelerator. But then when you stack them on top of each other, it's like, you're not 1 + 1 + 1 + 1.
Yep.
You know, it is like times 5, times 10, times 20. And what I think that does do, though, is it draws a line in kind of time. And I don't know where you would place the exact bifurcation, but there is an old world and there's a new world. And I think over the last decade, at least, we have lived through this explosion from really what was like the first internet era to now we got the Facebooks and, you know, the X's and all of those things really kind of hit their stride, grew to large scale. And we also started to get the cryptocurrency. We started to get a lot of the AI stuff, et cetera. What I wonder is how much of the legacy financial system is set up to understand this world. So not even invest yet, just understand it. And there's a story from this week that you called out that I think is really important, where now economists, this is not you and I, this is not Zero Hedge, this is not, you know, maybe people that we would be sympathetic to on the internet. These are economists who are calling into question the U.S. inflation data. And they're saying it may not be accurate, partially because they don't have enough people to use their antiquated methods to go and calculate the inflation. And so it goes back to this thing of Secretary Bessent was asked by the All In podcast, do you believe the economic data? And the first word out of his mouth was no. And then he quickly backtracked and try to make it more kind of a polished answer. What do we take about this idea that the inflation data may be wrong, or other economic data points that are used for the traditional financial world to invest capital?
Well, we had the payroll number today. The expectations at this point that I've seen are that last year and this year, the data will have been overstated by about 50 to 60,000 jobs a month. All the data is bad. It's hard enough to capture what happens in an economy that's complex. But as we've gone more into the digital economy and things have sped up, as Elon Musk said, we're still using systems from hundreds of years ago. The technology is archaic in terms of being able to count anything. And I found in his case, what he said, not just the fraud, but the inability to do things. And when he asked to actually see the treasury receipts and actually go the way anyone would go through to figure out what the math is, he couldn't believe he couldn't see anything. So I think people have been able to trade off this because there wasn't another world that existed. I listened to an interview with Demis Hassabis this week. I've listened to him about 3 times in the last 2 weeks. This was a really good one. It was, again, right after the Google I/O developer conference. But he just talked again about how fast things are speeding up. Mm-hmm. And so when you revise jobs a year reverse, and what he's saying is that what equates to every year in innovation of AI is about 10 years of the past. You have to really think about that's just a staggering number. That's how fast everything is changing on the AI side. So there's no way that GDP, a statistic created in the 1930s, can possibly comprehend what happens with the intangible side of the economy. I will say I'm beginning to hear more economists. They tend to be on the younger side. Admit this. I've been yelling this since I first went to Silicon Valley and started changing my views, which was in 2013 at Singularity University. I don't think most economists have done this, but they are starting to turn. And I think that puts a much more difficult situation on all of the traditional finance world, because they are still believing, that we're going to go back and retest the lows. We had the Xi-Trump call this week. Rare earth was all over the papers this week. We talked about it, I think, last week, if not the week before, about how important this was, that China controlled the world's rare earth. That phone call to me, followed up by Trump admitting that we're going to go out to China. If there was any doubt about what's going to happen between China and the U.S., it's the tariff. We do not have the upper hand on the tariff situation. I'm not saying they don't have the same kind of risk, but this is a mutually destructive situation, which means for everyone that's there, I like seeing that small cap stocks are about to break higher. I love that the sentiment's still not there. I love that Ethereum and Solana haven't broken out. I kind of get the feeling this squeeze thing is going to be a summertime thing more and more.
Well, with China, it feels like that mutual destruction is like who can withstand more pain. Right. We know that both sides are being kind of chipped away at, and it's just like who calls uncle first. And the meeting in Switzerland where they decided to reduce the tariffs by 115% was kind of like, hey, we're not really going to destroy each other. Right. Mm-hmm. It's like, let's put it, let's lower our guns. You don't have to put it down completely, but just like don't point them at each other right now. And so that then brings us to investment portfolio. We know stocks have done very well off the lows in April. You've called out the small cap stocks being very important. I think also the small cap coins, kind of a similar type idea. When you look at all of these stocks that have been performing, it seems like we're watching a rotation occur, right? It does feel like, okay, Mag 7 isn't what it was a year ago, 2 years ago. But then you see like the Circle IPO. And so like, is this something where we're actually going from incumbent to challenger in the stock market? Like, does that feel like a theme that people can start to kind of pay attention to? Because to me, the Mag 7, we know they're going to spend a lot of money on the AI stuff. We know they're going to benefit from that stuff. But it's actually the core weaves and the circles. And like, if you think of the stocks that have done really well so far this year, they do seem to have kind of this challenger positioning. And they seem to be outperforming the incumbents in their various sectors.
Yeah.
Today's episode is brought to you by Maple, the go-to place for on-chain asset management. There aren't many teams in crypto who manage real money the right way, but Maple does. Maple now manages over $1 billion, combining serious finance experience with DeFi innovation. I use Maple because they make it simple to earn real yield, whether that's allocating stablecoins for over-collateralized lending to institutions, depositing Bitcoin to their institutional Bitcoin yield offering, or accessing their premium DeFi assets like Syrup USDC. If you're serious about putting capital to work, then go to maple.finance to learn more. Once again, that's maple.finance. Go check them out today. Today's episode is brought to you by Gemini. Are you interested in effortlessly growing your Bitcoin portfolio? I sure am. So good news, Gemini designed a product just for this. Meet the Bitcoin credit card powered by Gemini, which offers instant Bitcoin rewards on every purchase. This MasterCard World Elite product has no annual fee and no exchange fees to acquire your Bitcoin rewards. It's that simple. The magic of the card doesn't stop at the rewards. The card is sleek metal design that comes in rose gold, silver, black, and the new limited edition Bitcoin orange. Sign up today to earn a $200 Bitcoin bonus to jumpstart your Bitcoin portfolio whenever you spend $3,000 in the first 90 days. Obviously, terms apply. Go to Gemini.com/card for more details. That's Gemini.com/card. Go check them out today.
So when you get to a point where you've had this major V, what I try to look at the market is what was working on the way down and is still working on the way back up. So as an example, gold was working on the way down and it's still sitting at the all-time high. So it didn't reverse. The dollar has been weaker. Was weakening on the way down. It's barely bounced back with everything going on. Those are structural things and they're both related to the same thing. And the structural thing is the dollar is not the global reserve currency anymore. And the rest of the world realizes that it's kind of nationalism. And so the dollar has to be it's overweight right now in everyone's portfolio. The same thing as US stocks. And gradually over the next 3 to 5 years, as long as the tariffs don't force people to panic out, it'll be a slow bleed over time. And you should expect that the dollar is going to be on the weaker side. The other thing, so the AI trades did fall. They fell violently. They've snapped back violently. The AI situation in terms of the news did not change. If anything, Meta jumps into Constellation. Meta had already upped their investments on the data center. Everyone who got negative on what's happening with AI in the compute side was dead wrong. That's why we're at the early stage of this. Silver broke out this week. Very important level. And I see silver as being part gold, but also part of the electrification side. Copper broke above 500 this week on the futures. There is a shift that's happening in a rotation. The AI trade is still dominating. The crypto world is still on this path with government supporting it. Government is supporting nuclear. Government is supporting AI. Government has to support the healthcare and things like that. It's still trying to help the bottom end. I think everyone just has to get ready. By the end of this year, the number one theme is going to be the embodiment of AI and the people understanding that this whole talk of humanoids and everything is going to be real. It has scary consequences for the job situation in terms of this. I get reached out more on this show from things that I say from people about AI. Many people have reached out about, hey, I just lost my job. You seem like you're using AI that much. What's your advice on how to do that? And for the most part, I'll send them a response. But the thing that's come up more and more now is that they're starting to worry about their kids. So this is a weird world where from an investment side, I think people need to have money in Bitcoin because I think this is part of that hedge on that disruption that's going. And then for the stocks, I think from an investment standpoint, the semiconductors, I believe the power side still remains a great place to be. And then even though we'll see a trade in small caps, I think small cap companies have a really hard time competing with the larger cap companies. But in particular, we're going to move away from software and away from coding. And I think we're going to spread more into the physical world again.
And in that physical world, there seems to be an intersection of technology and the physical world. So we know that robotics is a huge part of the American manufacturing. Now we do have the administration coming out saying we don't want to make socks and t-shirts here. We want to make, kind of higher end stuff that requires kind of precision manufacturing, advanced manufacturing. Do we have enough talent, you think, to actually execute on this stuff? Like, do we have enough robotic engineers? Do we have enough people who can actually operate in these facilities? Like, I always go back to this idea of, Trump even says it, right? Like he's trying to take money from Harvard to give to trade schools. And it does feel like there's like a goal. And then we have to ask ourselves, do we have enough of the minerals and resources? Do we have enough capital? Do we have the desire? Do we have the talent? Right? Do they have the skills? Like there's a lot to this that maybe is not so obvious on the surface, and talent being kind of crazy component here.
I hear this repeatedly, even from the housing market, with people that are still building. They just say they have shortages. We don't have enough people in that aspect of the economy, because we've directed everyone more towards different parts. The service side, we have shortages. Everything in social work and healthcare, nurses. And now that immigration is going to be changed significantly, and I don't think people have fully come to the reality of what that means. The whole thing with student visas, and we don't have enough people right now for the physical side of the economy. I wrote a paper this week for 22V on Brazil. And I'm very positive on Brazil. I live there. There's just certain times, and it usually comes down to two things. If the dollar is weakening, that usually is really good for Brazil. And if there's a commodity boom, that's usually good for Brazil. And I mentioned last week the rare earth side in Brazil being a large player in that market. The rare earth side, we don't have enough. We're going to have to go get it. It was funny that Greenland was brought up by the EU this week on rare earth. Like everyone realized across the globe this week, in case you guys didn't see it, China not only stopped rare earth exports to the US, it did globally. And that's because the US was going to try and isolate China and negotiate with everyone. Said, oh, okay, if you're with the US, you don't get rare earth either. No auto production, no military. Like China was putting out this really big trump card and saying, no, fine. If you guys are going to all gang up on us, then we're going to stop rare earth. So I think when we come out of this, which I expect now the negotiations to go much faster with China, that's what I think this week with the rare earth kind of set off. I think what you're going to have is people start to move around and start to focus again on, okay, we have to go as fast as possible with rare earth, as fast as possible with finding people to work in here, because it becomes an AI race and everyone realizes that the supply chains have to be rebuilt in 3 to 4 years. So
when we look forward, you previously said that you thought stocks would go near or hit new all-time highs. We have seen this kind of acceleration. Do you think that with the Q2 economic boom, the current economic policies, the fact that Elon Musk is throwing the temper tantrum and saying, hey, there's no way we're going to be able to cut the budget, we got to go focus on productivity, like free walk to all-time highs by the end of the year?
Well, there's no such thing as a free walk. It's all probability adjusted. There's still a chance that, especially with Trump in office, anything could happen over the course of the next month. But
next 24 hours.
Exactly. But since tariffs have been the overhang and the sentiment has not gone back up to where it was before. And I do think the economy in the second half of the year, where people still kind of are talking about recessions and things like that, I think we're probably going to have a squeeze beforehand. So I would be surprised at this point if we don't get to new all-time highs before the end of the summer, driven by the fact that the positioning is still way off base. The next time that I think we're probably going to run into some kind of problem, and it's possible that, like as an example, that we don't get the bill through by July 4th. But if we do, and you go through the next month, okay, if China and the U.S. can come to some agreement and the bill gets through, and that's really all that is needed. We did this whole rally with one deal with the U.K. Nothing else has changed. And yet people are still waiting for the next leg lower. I believe we're about to see the accelerant, the realization by people of just about how many benefits are coming from AI. The profit margin is the big deal. And here's the risk. Trump has said, like in the case of Walmart, I expect you guys to put no prices through. In the bigger picture, the reason he says that, he wants corporations to eat this. And that would be a transfer from companies to labor. That's what he's hoping. The profit margins will be really interesting. Mm-hmm. I think AI is going to do that, but what he might be squeezing the sausage is, you guys can't raise prices. Okay, well, that means our margins are going to go down a little. That means we're going to have to get rid of a few more people and bring AI in a little bit faster. That's unfortunately the place that we are with a lot of the corporations that make up the S&P 500. There's a race to try and keep your margins up at higher levels and benefit from AI. And the fact that agents are coming and humanoids are coming, it's going to be a very difficult game between the work side and this. And that's why the government's just going to keep printing money. And I'll just keep saying it. I believe capital controls will be a story before we get through the summertime.
And what's going to happen in that scenario? You think that they would just disincentivize any capital from leaving the market?
It'll cost money. People will have to make a decision to take money out. I don't see how he's not going to continue with trying every sort of redistribution. And if in the China situation, we don't do the tariffs, which is kind of the pressure that's going, then it has to be something that, okay, your money's here. That's great. But if you're going to leave, you're going to have to do this. There's a whole bunch of things. I think it'll be overread as something bigger than it is. But I think for Bitcoin, anything with capital controls in the US is unthinkable. But I know most of the things, the people I listen to, most of the people I hear that are talking, they're paying attention to this. Hey, it was in Stephen Mirren's paper. Hey, it's in the bill. Like remittances, that one's easy. But for investors and dividends on things, like it's just, I think there's other ways to play this other than the tariffs. And I think this would go more towards hurting pension funds and stuff like that, less towards the sovereign wealth funds. And I think that's the route he's going to go.
Yeah, it's fascinating to think through. The economic policies could still throw a wrench in all of this, but I do wonder the taco trade. Has that now resonated? It's kind of like retail investors, right? Like they buy the dip. Every time there's a dip, I saw, I forget who put it out. Maybe it was Adam Kobisi or somebody put out saying every time that we've had a down day, the next day in the stock market this year was up 0.36%. on average. And that compared to historical was like 0.02%. Mm-hmm. And so what they were basically saying is like every time there's a dip, retail is buying and you get the green the next day. That is now like a religion, right? That like we have left nobody's looking at numbers. Nobody's looking at anything. I see red. I put my money in the market. I do wonder how much of the investor base, both retail and institutional, I don't care what the economic policies are. I don't care what what's being announced. The single biggest intelligence test of our generation is, are they going to keep printing money? And if yes, buy. Right? Like that kind of seems where we're ending up, that people almost don't even really pay attention over time.
That's why, to bring it full circle, what happened with Elon Musk yesterday is very symbolic of that whole thing, which is, regardless of what happens, there will be more printing this year in some form, some shape or fashion. Either the deficit stays at this level or they figure out some way again to help the people they're trying to help. And I think Trump has made it crystal clear. So if rates go higher, which again, in my opinion, I don't think this is a panic moment, but the housing market is a problem. Housing affordability is a major problem inside the country. And he needs to make housing more affordable if they're going to win the next election. Like, it's a part of kind of what's going to go on. So you can stimulate growth, but if rates go higher, then we have to do something. And that's where this whole thing gets back to. You can't run away from 120% of debt to GDP. And you can't run away from, the fiscal deficit is at 7%. We'll get there in 4 years. That's not the way it's going to work if rates start moving higher. And I think that's what's going to happen.
Yeah, I tend to agree. Let's see what happens. Where can we send people to find you on the internet?
I'm still on YouTube doing my weekly. I'm still on Substack doing my weekly. VisserLabs is attached to it. I'm posting on X. I've been real busy lately, so it's been less. And then for the institutional people, 22vsecurities.com. You can find me there. And all there, I'm doing research papers on AI and doing a lot of consulting work for them, for asset managers, for family offices on how do you incorporate AI into their business. This has become a bigger thing for me. I know you've been involved in this, and I'll just say this to finish this for people. I don't think any decision that you make in your life now should be done without consulting AI. It's a quick thing. You can do it verbally, but it's come to the point now where I incorporate it in every decision. Like, it's a partner of mine in terms of, okay, I'm going to go do this. What do you think of this idea? What am I not thinking about? What should I do? It is the more that you do that with, to get back to people reaching out, the better your situation will be at work, the better decisions you'll make. But also, the more that you use it as an adult, the more you're setting the example for your children. Your children need to be using it every single day.
I think that it is the single easiest thing to incorporate into your life that has such an asymmetric impact. And
it's free.
Yeah. And some people aren't going to do it, but that's okay.
ChatGPT voice mode. Use it. Trust me, voice mode, not the little microphone, the voice mode. It's free. Download the app, have a conversation about any book you want walking down the street. It will be fantastic.
I use it for my daughter whenever I tell her something and she says that's not true. And then I ask, right? Because I know that I can get what the answer that I want. And it's fascinating how much she immediately defers to, if the AI said it, then it must be true. So, all right, we'll do this again next week.
Thanks for having me.